Today, Bitcoin and Ether fall to wrap the week amid uncertainty over tariffs. Crypto.com CEO says the SEC has closed its probe and won't be taking action against the crypto exchange. Plus, Ava Labs President John Wu breaks down recent regulatory advancements for crypto. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices are in the red to end the week, with Bitcoin dropping more than 3% to $84,000 as of noon Eastern. Ether and XRP both dropped nearly 7%. And the moves lower align with the broader market as investors are digesting key inflation data and are grappling with ongoing tariff uncertainty. This week, the president announced a 25% tariff on all cars that are not made in the U.S., and he's expected to announce more tariff plans next week. Now, for the week, Bitcoin is flat, while Ether is down more than 5%, on pace for its fifth weekly loss in the past 6. XRP fell more than 9% for the week as of noon, on pace for its second weekly loss in 3 and its worst week since the end of February. Okay, let's talk about the top stories. The SEC has closed its investigation into Crypto.com. That's according to the crypto exchange's CEO, Kris Marszalek, who posted the development on X last night. A Crypto.com blog post notes that the SEC informed the company that it had officially ended its probe and will file no enforcement action. Back in October, Crypto.com revealed that it got a Wells notice from the SEC and then sued the agency, but then dropped its lawsuit 2 months later. In a series of posts, Marszalek argued that the agency, quote, used every tool available to attempt to stifle us, restricting access to banking, auditors, investors, and beyond. We reached out to the SEC, but didn't hear back right away. This is the latest news related to the SEC dropping cases. Just last week, we told you Ripple's CEO announced that the agency had ended its 4-year-old lawsuit against the company. Other crypto companies and exchanges, including Coinbase, Kraken, Robinhood, Binance, and OpenSea, all previously saw lawsuits or investigations dropped, resolved, or put on hold. Next, Galaxy Digital agreed to pay around $200 million to the New York State Attorney General's office. This is to resolve matters relating to the company's alleged promotion and investment of the now collapsed cryptocurrency Luna. The settlement was disclosed in the crypto financial services firm's most recent financial report out earlier today. Galaxy reported net income of $365 million for 2024, which includes a $166 million accrued legal provision for its settlement payable between 2025 and 2028. That figure represents a discounted amount. Now, Galaxy's reported settlement is consistent with documents filed by the Attorney General's office earlier this week. The document alleges that Galaxy unlawfully failed to disclose its intention to sell the token when it bought and promoted it in 2020. The Luna token was issued by Do Kwon's Terraform Labs, the company behind the notoriously depegged algorithmic stablecoin Terra, which is tied to the Luna cryptocurrency. Last, a group of lawmakers are once again warning of President Trump's ties to crypto, this time sending a letter to financial regulators raising the alarm over a potential, quote, extraordinary conflict of interest. These concerns were raised in a letter that was then sent to the acting comptroller of the currency, as well as President Trump's nominee for the Fed's vice chair of bank supervision. The letter was sent this morning and was spearheaded by Senator Elizabeth Warren, the top Democrat on the Senate Banking Committee. 4 other Democratic senators signed the letter as well, and that included Senators Ron Wyden, Jack Reed, Chris Van Hollen, and Cory Booker. The letter points to this week's announcement that Trump's crypto project, World Liberty Financial, will soon launch a stablecoin. The lawmakers warn that the president's involvement in this venture could create unprecedented risk to the financial system and to the integrity of decisions made by the Fed and the Office of the Comptroller of the Currency, as both agencies would be tasked with regulating, supervising, and enforcing the law for stablecoins, including the one from World Liberty Financial. Lawmakers go on to argue that, in effect, the president could sign legislation that would facilitate his own product launch and then retain authority to regulate his own financial company. Last week, a group of 5 Democratic lawmakers, including Senator Warren, sent this letter to White House Chief of Staff Susie Wiles, pointing to potential conflicts of interest and ethical concerns tied to the president's meme coin and company World Liberty Financial. We reached out to the White House today for comment regarding the new letter and got the same statement sent to us last week regarding the prior letter from lawmakers to Wiles. A spokesperson told us, quote, President Trump's assets are in a trust managed by his children and that there are no conflicts of interest. All right, turning to crypto regulation for our main story. Ava Labs President John Wu was in D.C. this week speaking with lawmakers about crypto legislation. We spoke with him all about that, as well as his thoughts on recent regulatory advancements in the space. He also weighed in on the news that Grayscale filed for a spot Avalanche ETF on the NASDAQ. Avalanche is the Layer 1 blockchain platform developed by Ava Labs. I got to start off by asking you about today's news that Grayscale filed for a spot Avalanche ETF. Now, if it gets the green light, it could give investors a way to invest in that token through brokerage accounts. As president of Ava Labs, what does this development signal to you?
Well, Mackenzie, it's good to see you again, and it's very exciting. Grayscale as well as Van Eck have both filed now, and it signals that there is a real demand to have the investment asset of Avalanche with various players. So it's super exciting for us. It also shows that confirms the technology of Avalanche, as well as it will have its place in the future of digital assets.
So you're at the DC Blockchain Summit this week, where industry leaders and lawmakers came together to talk about the future of crypto legislation. Let's start with the basics here. What was the general vibe in the room, given that we're in a very different environment compared to a year ago?
Well, actually, I wasn't at the summit, but I was at Capitol Hill meeting with a lot of senators and the representatives individually. And it was unbelievable momentum. In fact, I had great conversations with Majority Whip Emmer, as well as Representative Brian Stile, right while the Stable Act was being introduced. So they were very gracious with their time. The vibe is this. It's a real momentum. They want to be transparent about what they're doing. They are very serious about having clear regulations so that innovation and capital formation in the space can be back on shore. And they want to do it in a very responsible way. Representative Stiles repeatedly said, we want innovation on shore, but we want to make sure that the Stable Act also doesn't have any risk for financial stability in the system. So they're thinking about both sides.
So we're seeing different versions of that, like red lines through the existing draft. It's still got to bounce around to both the House and Senate. What are the priorities in terms of moving this legislation forward? What are the big edits that need to happen in order to get lawmakers on board?
Well, the Senate version, the Genius Act, and the Stable from the House, I think there's one big difference, which is federal versus state. So those are things that need to be reconciled over time. I think there's one more big point here is that I think some people in the Senate are a little bit worried that this needs to be have a little more beef on it, so to speak, in order to make sure that a Silicon Valley bank type situation doesn't happen. With that said, though, I'm not sure that ultimately that responsibility is very important, but that ultimately may not be part of this act, could be part of a different one.
And so stablecoin legislation is one piece of a much larger puzzle. Obviously, we've been talking about crypto market infrastructure bills for the last few years. Senator Lummis is looking to have some sort of Bitcoin buying plan to complement this new SBR. Talk to me about what lawmakers are prioritizing in these closed door conversations, what the agenda is and what the priorities are.
The agenda is very simple. It is to bring innovation in this space and the capital formation in this space and the jobs in the space back onshore. And we've seen a lot of companies start developing offshore. And we've seen that because the rules were just not clear here. Now, I think the US has a great opportunity right now to set standards, just like it did in 1996 for the internet, and be the leaders in these standards. And if you are going to be the leaders in setting standards and having, hard rails, so to speak, as to what these rules are, or hard delineated lines, you will actually crowd out bad actors, which is actually the fear of a lot of the people who are not satisfied yet with all of these acts.
So we have the most pro-crypto Congress in history. Suddenly, we're seeing a lot of bipartisan support for the crypto industry that used to be partitioned across partisan lines. And just yesterday, we had Congressman Sam Liccardo on Crypto World talking about his legislative priorities, including the Stable Act, which he co-sponsored. That was introduced by Republicans, but it does seem like both parties might be at least a little more in lockstep when it comes to the digital asset industry. But what's your sense? Are both sides approaching the topic of regulation differently, or is there more consensus in the conversations that you had this past week?
Absolutely. So I can't emphasize enough times that Majority Whip Emmers in our meeting, he was so gracious at the time, said that he wants this stuff to happen in his words, nonpartisan way. He doesn't even use the word bipartisan. He uses the word nonpartisan. And he's working with Democrats like Soto to make the Securities Clarity Act, I believe, and work together on both sides happen. So it is really more bipartisan or nonpartisan than ever before. It could be better, but it's definitely moving towards that direction.
So obviously stablecoin bills are top of mind for many in the industry, but for you at Ava Labs, I'm sure there are other wish list items. What does the industry need for those that aren't issuing stablecoins?
Well, Ava Labs and Avalanche is known for bringing real world activity, real world use cases on chain. We've worked with financial asset managers like Apollo, T. Rowe, and banks. We've worked with JP Morgan, Citi, and fintech providers like Visa. So those players have real existing businesses in a different world. They cannot risk on non-clear rules. So it is a big unlock for business innovation for Ava Labs and Avalanche. I think there's only 3 big trends right now in the world of crypto. One is Bitcoin, 2 is stablecoin product market fit, and the third one is tokenization of assets. And Ava Labs is in the center of stablecoin activity in the sense that all the stablecoins are on Avalanche, and the builders who will use those stablecoins like Apollo or a Visa are partnering with Ava Labs. And also on the tokenization front, we helped Apollo tokenize a credit fund. We've helped KKR tokenize a credit fund. So tokenization is also a big thing. Those are the 2 big ones, and we're very excited for the progress we're seeing in terms of the clarity and rules.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.